let's start with the retailers first. Is it a sign right now, the results that we've seen, that the American consumer can still continue to power the markets towards these record highs?
Yeah, I mean, the consumer's really been the stalwart for all of 2019. Now we've got pretty decent jobs market. Equity markets are good, and that's helping about a third of the households. And so I think, we're really set up for a strong final finish, and I think consumers are feeling good.
All right, so as we say this, Tom, the markets at these levels, are there still places that you can find some kind of a relative value? Or is this one of those situations where, because there is such upside momentum, you just buy these highs because it just goes higher from here?
Yeah, I mean, I think, the perspective that's hard to keep is, markets are up 22%, so we know valuations have increased, but stocks are cheap against investment-grade bonds, really cheap. But what's really, really cheap are cyclicals. So I think if investors trying to get exposure, and I think it makes sense, into the final 7 weeks to say, we can make new highs even from today. The sort of contrarian side would be to be long some of the industrials, energy, basic materials, the financials, the ones that have kind of lagged the last 2 years.
So healthcare, industrials, and technology are the three best performing sectors over the last month. They've arguably been powering markets towards record highs. So what about those small cap stocks? We've been making a lot of them. They were playing catch up for a long time, but it seems like they are really catching up right now. Is that a good sign for the overall market?
Yeah, small caps are super sensitive to cyclical growth and economic growth. So, when you see emerging markets and small caps rally and small caps making new highs, this is just, I think, further reinforcing the idea that 2020 economic growth is stronger than 2019, and that's a good sort of setup into stocks doing well next year.
What about this idea that we have this bevy of data over the last few months, whether it's ISM or PMI or anywhere around the world where we see manufacturing kind of economies start to slow down? Is there still a concern right now that that slowdown will play out, and at some point markets will have to take a leg lower?
I mean, the PMIs have been weak for almost 2 years. We've had an industrial recession globally, and, it's kind of been a mistake for investors to think weak PMIs should govern their equity positioning. I mean, PMIs have been tanking for much of 2019, and we've had a great year. I think, PMIs are actually bottoming. That's really what we're seeing is incremental improvements. And again, if PMIs are turning, historically, that means there's upside to earnings growth next year. I think people are too pessimistic about S&P earnings next year.
All right, they're too pessimistic about the earnings picture. If that is the case, does that earnings growth still really, will people still pay up for every dollar of incremental earnings for the S&P 500? Will multiples expand next year?
Yeah, Dom, I think it's too early to know kind of whether 2020 is a boomy recovery or just a pretty decent cyclical bounce in terms of growth. But historically, when the ISM exports number recovers back to 50, which it did last month, S&P earnings typically grow around 18%. So, we're talking about earnings possibly being, mid to high teens next year.
All right. Before we let you go, I got to ask, what's happening with Bitcoin? It's been a bloodbath so far for a lot of these crypto investors. Is this something that we can kind of continue to see happening into next year as well? And is there a bottoming process at all taking place in places like Bitcoin or other cryptocurrencies?
Yeah, I think Bitcoin's weakness really since July is really understandable because regulatory resistance has grown, right? We've had congressional hearings on Libra, and the White House has been, publicly against Bitcoin. So I don't think adoption has really grown since July. And if you can't grow adoption, the network effects don't take place, and so Bitcoin drifts lower. But does this change, the 10-year or 5-year or even 2-year outlook for Bitcoin? I don't think so. Next year, there's a lot of reasons to be more optimistic about crypto. One is that as equities have made new highs, I think it really sets the stage for, risk-tolerant investors to add capital to risky assets like Bitcoin. There's the halvening next year. And I think China, while it's given mixed messages, is clearly more pro-digital assets, blockchain, and underlying that is cryptocurrencies. So I think that the regulatory developments are less bad in Asia versus US.